there are two things that are happening now that are really changing the Bitcoin narrative. Formulating that question, I thought to myself, this is the end of the beginning, or the beginning is over for BTC. And that's neither a good thing nor a bad thing. It had to happen. It just is happening. There are two things that I would use to summarize why this is the end of the beginning. The first is the 4-year cycle is dead. What Saylor's doing makes a lot of sense, but the only reason it makes sense is because strategy has too many BTC. There's too much concentration in it. So he's become his own worst enemy. So he's bought at poor times, and he sold a little bit, which is a good move. But we still need an upward 15% move before he's at break even. It's not a good way to be trading. I don't think it's healthy for there to be that much concentration, particularly the way he's done it, which is growing based on ever growing leverage. It's just not a healthy dynamic for the overall sector.
What's up, everybody? Tyler Rowe here with BitcoinTreasuries.net. I'm joined here today with the Bitcoin Treasuries takeover team from Psalion, Tim Enneking, managing partner, and Alec Beckman, the VP of Growth there. How are you doing today, guys?
Doing really well, especially after seeing Bitcoin take out 65K again this morning.
Yeah, it's nice to see. We've got Bitcoin down, roughly half from its highs last October. Treasury companies lost $62 billion in market share over the last, 8-9 months. And just in the past 2 weeks, we had the biggest IPO in the history that landed here in June with SpaceX. We've got on-chain usage holding up. So I guess in one of your earlier podcasts, Tim, you said, the 4-year cycle narrative is dead. So is this a stress test, that the Bitcoin, the crypto narrative survives, or is this the end of a new phase? You ran a Bitcoin fund famously back in 2013, so maybe we can start there. What are you seeing from your vantage point?
It's funny because I've been involved in this for a while and crypto for like 13 years now, and Fiat for like, God, what do you want to say, 30 odd years now. I've become reasonably good at feeling where the cycles are and the turning points are, the inflection points. And I was just talking to one of the guys in my office this morning. So there are two things that are happening now that are really changing the Bitcoin narrative. And in fact, as I think about it, just as you were asking that, formulating that question, I thought to myself, this is the end of the beginning, or the beginning is over for BTC. And that's neither a good thing nor a bad thing. It had to happen. It just is happening. But there are two things that I would use to summarize why this is the end of the beginning. The first is the 4-year cycle is dead. And you could say, hey, this is kind of, right now we're kind of in the 4-year cycle. And you would be right, we are. But the 4-year cycle was driven by Bitcoin halving. And what is the halving? People lose track of it. It just means that miners receive half of what they received for the 4 years prior to that, roughly, for successfully mining a Bitcoin, successfully solving the problem. And when 90% of Bitcoin remained to be mined and very little had been mined, it was a big deal when when the price went down. But you look at it now when there are fewer than 1 million Bitcoin left to be mined. It's less than 5%. I'm sorry, miners just don't play as big a role as they did before. And then there's very little happening on the Bitcoin blockchain. All credit to Ordinals and Runes and all those projects that try to build something build something else on the Bitcoin blockchain, a layer 2, to make more use of the blockchain, but they haven't really succeeded. And in any event, the Bitcoin blockchain is not structured to have tens of thousands of transactions a second, which is what other crypto blockchains are trying to achieve, because you really got to get 50K TPS to be able to compete with MasterCard and Visa and things like that. That's not going to happen on the Bitcoin blockchain. So that's the second thing. You've got the mining is no longer driving the train. That breaks the 4-year cycle. And then you have Bitcoin, it's entering a new phase. So what cycle is it following? And that's the other half of the end of the beginning, which is Bitcoin is now being treated basically as a risk on asset by everyone who invests in it. And I absolutely hate this because it provides a correlation between BTC and other risk on assets. So you talk about gold, and when I mean, or oil, I mean spot oil, because very little oil is traded on the spot market. Everyone pays attention to it, but very little oil is actually traded there. It's traded on, 98% is traded pursuant to long-term contracts. But nevertheless, the spot oil and Bitcoin have suddenly become correlated. And spot oil and gold, or rather gold and Bitcoin, have a higher correlation recently. It's been very high recently. And at the same time, you don't have the bad news is that Bitcoin in theory should be a haven asset. Chaos going on in the real world, Bitcoin goes up because it's not correlated. It's not inherently correlated. But what's happened is because of the second point, risk on asset, the third point is not matured, and it may never, we will see, but because it's dumped in with all the other or all other risk on assets, it's not being treated as a particular haven asset. And sometimes it behaves like one, sometimes it doesn't. But what that means is it's no longer this obscure little, totally non-correlated asset that lived its own cycles, irrespective of what happens in the rest of the world. I mean, right now, when I want to check for Iran news, because just out of habit, I have a Bitcoin price monitor that is up on my screen basically 24/7. When I see when I've seen a move for the last 3 months in Bitcoin, I go, oh, something happened in Iran. And I look, and sure enough, something did happen in Iran. It's funny in one way, but it sucks in another way because Bitcoin is being correlated with other risk on assets, but it's not inherently correlated. There's no reason for it to be correlated to oil, to gold, or anything. It makes no sense. But there's so much more institutional money in Bitcoin right now, and they have to categorize it somewhere. They have to look at it some way. They have to use some sort of metrics to try to predict what the Bitcoin price is going to do because that's their job. So let's see, is it a risk on or a risk on asset? Well, damn, it's certainly not a risk on asset, a risk off asset. So it must be a risk on asset. It gets jumped into there. And you have enough people thinking about it that way, it becomes a self-fulfilling prophecy. One of the things I refer to in my old fund and now in Psalion is something that I immodestly call Enneking's law. And that is that the profile of the average investor in Bitcoin or crypto changes every 18 months. And you can really see that as we went from bleeding edge tech guys and libertarians through various phases to about 4 or 5 years ago, small institutions. Now you have larger institutions. I expected governments to kick in as major holders, but it didn't really happen. A couple of them, but I'm sorry, Bhutan and El Salvador aren't really indicative of where the OECD is going. But that's going to come, and that will be the next rotation, next iteration of Enneking's law. And what you're seeing now, because you have large institutions coming in, what they think drives the market to a large degree. And so what you're seeing are more and more whales, or rather, you're seeing whales with a higher and higher percentage of Bitcoin, and the number of Bitcoin is increasing very, very slowly, and there's not a lot to go. So we have some really different trends happening in BTC now. From a original thesis, from a Satoshi Nakamoto libertarian thesis, most of those trends aren't good, but that doesn't mean, unless you're really in that mindset, it also doesn't mean they're bad. It's just evolving. And so I really think, in fact, I wouldn't even say it's the end of the beginning. I would say the beginning has ended. The beginning ended sometime probably in 2024. Then, in the attitude and the people that had an attitude toward Bitcoin really started to shift. It's basically about the same time Bloomberg stopped mocking Bitcoin and started actually reporting the price objective.
Mhm. That's one point I'd love to add on to that, Tim. I think it's really amazing that you just said what you said about how trends are different and how, we're kind of in uncharted territory here. for the first time, I saw this today. For the first time in Bitcoin's life cycle, if you look at all the way dating back to it's not from the beginning when Bitcoin started in '09, but it's somewhere around there, maybe 2013. It has almost identically followed the M2 global liquidity index and been almost one-to-one correlated with it. If you look, it is so like right there for years.
Sorry, you faded out a bit, at least on my end. Correlated with M2 what?
Global liquidity index. So the lines like followed each other almost identically, and for the first time they've really split. So the liquidity has gone way up and the Bitcoin price has gone down. This is actually by far the biggest split. It's really uncharted territory in regards to the M2 global liquidity index and Bitcoin. So it's just a new
Well,
trend.
actually, it's not at all uncharted territory because you just told us what the chart did.
Well,
Sorry,
it's just
horrible,
been
horrible play on words. My apologies.
no, I get it. But yeah, it's
But
interesting.
it's interesting. The thing is, in terms of scale, there's no way M2 matched what Bitcoin did, right? So you've got to dumb down the scale to make those curves match. I mean, they're not strictly curves to make the charts match. And it may be a super valid one. I have to say though, I've seen a lot of charts like that. And the problem is when you have to scale them down and have to juggle them, because there's, Bitcoin's done was 50 cents at the beginning of 2013. So it's done 10,000x. Obviously, M2 hasn't done 10,000x. So you have to fit it. And that very fitting process, by definition, it's distortive. But I still take your point, and I'm not saying in this case it's wrong. We are in uncharted territory for Bitcoin. It's never really behaved like this before, but it's because of people that are buying and selling it. The guys that hold it, they don't have any effect on the market price, right? And there are more and more guys holding it. Bitcoin is becoming more and more like oil. 2% is spot market. Everyone pays a lot of attention to that. And believe me, your filling station on the corner certainly pays a lot of attention to it, because when oil goes up, they can raise prices, even though the prices aren't going to filter through and may not ever filter through if that filling station is part of a group that has a long-term contract that fixes the price of oil. So Bitcoin is going to be, it's a tail wagging the dog, right? It's not 2% today in Bitcoin. It's probably not a lot more than that, actually, that's traded on a periodic basis. That small tranche dictates the value of all the rest of it. And it's a bit strange, but that's how commodities, and let's use that term for the moment, are traded in the world. They're not, it's the spot that's traded very frequently that determines the price, even though the portion of the commodity that's traded, even over a long period of time in the spot market, is very small.
Yeah, it makes a lot of sense. I think you nailed it too, saying, Bitcoin's kind of grown up over the last, really last couple of years. We saw the ETFs drop. The SEC CFTC has under this new administration been a lot more dovish on the regulatory front. Like you said, major financial institutions, it's not a dirty word to cover Bitcoin and crypto. You've got Bitcoin treasury companies popping over and showing the ability to raise a ton of capital. You've got people with model portfolios who are recommending, a Bitcoin allocation. There's not that career risk there that's been there in the past. What do you think, Tim, that it would take for Bitcoin to fundamentally change? Is it like an order of magnitude up in market cap before it can trade as something that's maybe not a risk on asset? Or are we stuck in this like regime where it does trade as risk on because of its 24/7 nature for quite a while?
That's a really, really good question. It's interesting because let's look at other things that are still risk on assets. Like you look at oil. Trading oil is a risk on asset. Buying a long-term contract really isn't. It clearly is a very volatile and the risk on asset, but also oil has clear underlying utility. Utility in the sense of being used in the real physical world, right? You burn it for energy, you make plastics, make for whatever you're doing. Gold is interesting, and gold is a really good example, not because people constantly call Bitcoin digital gold, but look at what makes up the price of gold. Gold has an intrinsic value. It's malleable. It's one of the most malleable metals at room temperature in the world. It's the best room temperature conductor unless and until someone invents a room temperature superconductor. And you can, because it's so malleable, it's not necessarily the case that you can plate things very thinly, but you can. So you can put a microns thick layer of gold over something and it will make it a great conductor, for instance. And people use it in circuit boards. My father actually built some of the first circuit boards in the world, literally made circuit boards for Seymour Cray of Cray Computer, who built the world's first commercial supercomputers. And all sorts of funny stories about that. But my dad used to be responsible for gold plating. And let me tell you, they did not want to put thick layers of gold on it. So there is a very, very strong intrinsic value of gold. Figure out how much it costs to dig it out of the ground, to refine it, to ship it, blah, blah, blah. And then how much it's worth because it is the world's best room temperature conductor and is malleable and everything else. It's a little bit of speculation, right? How much would it be worth? But most people figure it'd be worth between $700 and $800 if there was no other non-utility based value of it. But what else is gold? Gold is shiny. Gold is relatively rare. Gold, so it's pretty, and because it's malleable, it makes great jewelry. You can put it in all sorts of other forms. And it also makes good alloys, which is another characteristic that you can add to it. Why does gold have value, not just industrially, but as jewelry? Because it's pretty. And gold is something, there's a phrase I coined called historical financial inertia. Gold has been considered valuable for so long by the human race. It's valuable. Even if it was worthless, it's valuable because it's considered to be valuable. And gold's historical financial inertia is 10,000 years, probably more. Bitcoin's financial inertia, well, Alec just told us, right? It's 15 years, 16 years, right? It's small. And it's not something that people think, oh my God, Bitcoin, it's good. And it's valuable and there's no question about it. But what's interesting is that the delta between whatever the industrial value of gold is, at $700-800, and the market price of gold, which is blowing the doors off now in the $4,000 or $5,000 range, that's the same thing that drives Bitcoin. It's scarcity value in and of itself, or it's emotional, psychological, because it's pretty. Okay, something being pretty doesn't give it intrinsic value. It gives it value, but it's not intrinsic value. Bitcoin is rare, it's scarce, it's only deflationary because, let's face it, out of the 20 odd million Bitcoin that will ultimately be mined, at least 10% and probably more like 20% have been lost. And if you think Satoshi Nakamoto's 5% are never going to start moving around, and they probably won't, 1/4 of it's gone and there are more lost literally every day. That should make it more valuable than gold if we have that attitude driven by historical financial inertia that Bitcoin is valuable. And we're not there yet, right? It's simply it's too early in the life of Bitcoin to really claim that at this point in time. But we're getting there, right? It's clearly getting there.
Yeah, really
I hope
well
that
said.
makes some sort of sense.
Yeah, it does make some sense. It kind of pulls on a thread that I know we're going to kind of talk about too, with respect to the Bitcoin treasury space and these digital credit products. It's like the longer track record that an asset like Bitcoin has, the more likely in the future that it's going to perform in ways that it has. Gold's the
Absolutely. It
yeah.
is literally, to some degree, a self-fulfilling prophecy. You can't burn Bitcoin to generate heat. You can't plate stuff with it. You can't make jewelry out of it. It is valuable because people think it's valuable. And when I first heard about Bitcoin 13 years ago, and almost 14 now, this is the dumbest thing I've ever heard. What the heck is going on? And so I spent a lot of time. I read books on the tulip mania, which people don't realize now lasted 5.5 years. I read books on Charles Ponzi on the streets of New York. I looked at pyramid schemes and pyramid selling and every possible sort of financial scam, even vaguely related to it. And none of them fit. I mean, really, none of them fit. And then so I started looking, well, I think fiat's up here and I think Bitcoin's down here. And I dug into Bitcoin. It didn't lose any, cred, let's call it. And I started looking at the fiat side. And the more I dug into fiat side, I realized, oh my God, I know nothing about fiat. And since in the 10 years since then, I realized almost nobody in TradFi really understands what fiat is. Right? They tell you, oh, it used to be backed by the dollar, by gold. Wrong. It used to be, it used to be control, or it's all controlled by central banks. Also wrong. I mean, if you look at the history of TradFi, it goes back a long time, right? Fiat goes back a long time. But if you look at things like seigniorage, right, which is the guy that finds a gold mine on his land, what the difference between what it costs to extract it and what he can sell it for, all of seigniorage is not based on utility. I mean, there's so many things about fiat that TradFi people get wrong. And so I finally looked at TradFi and like, boom, it fell down, particularly since August 15th, 1971, when Nixon finished what Roosevelt began and took the US dollar completely off the gold standard. Keeping in mind, it was never 100% on the gold standard, which most people don't even realize. And by law, it wasn't until 1900 that there was even a law about what little was backed by gold. So it's just the stories are just, the attitude toward fiat is just so wrong because people make all sorts of assumptions. I remember this. I was in Moscow at the time when I suddenly finished all this research. I thought, this is nuts. The world is really a fragile place. And I remember walking around just thinking, lost in my own thoughts as I looked at all this stuff and said, how does this all work based on something as fragile as fiat? Because at the end of the day, fiat is based on belief. It's almost a religious question. We believe in the dollar. We believe in the euro. Therefore, they're strong. It's like, okay, so if we can believe that, and the first currency after 71 was the Cypriot pound because the Greek colonels took over Turkey, right? And they introduced this new currency and it was worth nominally more than US dollar, $2 to buy one Cypriot pound, one of the few currencies that was stronger. It's like, it was backed by nothing. They didn't even try to claim it was backed by anything. Hey, $2 to the pound, end of story. And it hung in there. Now, oh my God, how did that happen? So then my rhetorical question became, if 1.3 million people co-located on an island in the Eastern Mediterranean can create their own currency from scratch, why can't 1.3 million people who are not co-located on a Caribbean island, Eastern Mediterranean island, create theirs? What rule says you can't? And then you rapidly realize that the internet, how important the internet is to crypto. Obviously it is, but when you ask a question like that, you really feel it, because when those 1.3 million like-minded people couldn't talk to each other easily, there's your reason, right? They had to be co-located. Internet, boom, don't need to be co-located. Suddenly, you can create another currency out of thin air, just like everybody else is, and look at quantitative easing with trillions of dollars created, that the central governments are not trying to pull them back. And I think that makes a lot of sense. And I'm not against quantitative easing. I thought it was brilliant. It never existed before. Never underestimate the creativity of clever humans. And most central bankers, while not maybe imaginative, are certainly not stupid, and they're generally quite clever. And you could see it with that. And so you look at Bitcoin and you think, there is absolutely no inherent reason for it not to take off like it's doing. And you need a critical mass to believe that a currency is valid. You need a critical mass for the US dollar. You needed a critical mass for the Cypriot pound before it was replaced by the euro. You need a critical mass for the Chilean peso, the Argentinian peso, which you don't have, which is why the peso gets killed all the time and they replace it with something else and periodically drop zeros off of it. Zimbabwean dollar, right? There were trillions of Zimbabwean dollars to buy a loaf of bread. No credibility, no critical mass of belief, of faith. Fiat almost becomes a religious question. And because of all of that, I realized, hey, fiat isn't up here. It's just right here. It's got, again, like gold, some historical financial inertia behind it, but not nearly as much as gold. The euro's been around for 30 years, 25 years. The dollar's been around. People don't know this. How long has the U.S. dollar been around? Good question for you two. How long has the U.S. dollar been in existence?
I want to say 1850s.
Yeah, somewhere before
Nope.
250 years ago.
No, not before, after. According to the Smithsonian, in 1861, there were 8,000 currencies in the United States. There was no U.S. dollar. Every state, every bank, cities, large companies all issued their own currencies, glorified IOUs. 1863, at Lincoln's behest, Congress passed a law saying, okay, there's only going to be one currency in the U.S., it's the United States dollar. And they were able to reduce it from 8,000 to 2 because the Confederate dollar in the South kind of wasn't paying a lot of attention to what happened in Washington, D.C. at the time. So the US dollar as the single currency in the United States began when the Civil War ended in 1864. So you have it's much more recent than people realize.
Mm-hmm.
And there hasn't been a central bank, and from some definitions, there still isn't a central bank because the Federal Reserve Bank wasn't really designed to be a central bank like other banks are. It's really has that function. And so you look at this and you think, I mean, you guys look into this stuff because you're at crypto. Yet, if I ask you how many currencies are in 1861, neither of you would have said anywhere near 8,000. My God, right? Because there was no official U.S. currency. And so when you think about things like that, it's like, well, what the hell? Why can't we create another one? We got the internet, so it can be a decentralized currency. Bam, Bitcoin, born. Love it. It's one of the reasons why I tell people crypto is not revolutionary. It's evolutionary. But the problem is so few people understand fiat financial history, they don't realize how all arrows were pointing in this direction, and we just grab the next level.
Yep. Yeah, I think there's these generational memories that only last so long as well. Like you said, the central bank, so called, whether you can quibble on whether or not the Federal Reserve is a central bank, but yeah, it's only been around roughly 100 years. Income tax has only been around 100 years, but if you talk to most people in the United States, if you told them, oh, it's a recent development, they'd look at you like you have, four heads. But yeah,
Yes.
it's crazy how the Overton window can shift and all these things adapt. So, our kids, grandkids, if we tell them about the good old days of when Bitcoin was, a risk asset or an early currency, like there's definitely the possibility that they'll look at us like we've got, two heads as well. But I'd like to
never talk about the good old days. The old days almost always sucked compared to today.
Totally.
Right? People's memories change.
That's right.
But,
nostalgia,
in fact, here's a really
is a
extreme
powerful
one
thing.
for you. What's that?
I said nostalgia is a powerful and odd artifact.
And plus, people all in another generation, they always think, oh, or really every generation, our problems today are unique. We're unique. Nobody's been like me. Nobody's had problems like we have. And my response to that is always this. When in recorded history did the quote first appear, and I'm paraphrasing, that the next generation is irresponsible, they will never be able to take over from the current generation, effectively from my generation, and the world is going to go to hell in a handbasket. When is the first recorded instance of something like that being said?
I bet it's a long time ago, huh?
You tell me.
1,000 years?
Yes. Either of you.
I don't know.
Well, come on. Stick your neck out there. How long ago?
I mean, probably as long as we've been writing, right? It's probably some
So give me a
ancient
year.
text.
Give me.
Yeah.
What's that?
8,000 BC.
You are that. Alec is wimped out here. You are the closest anyone has ever come. There wasn't any writing, 8,000 BC, right? 10,000 years ago, because you had to get to the pyramids or the Assyrians before you get to real writing system. But on a pyramid in 2500 BC is a quote extremely similar to what I just said, right? And everybody since then thinks, oh, the next generation is going to be horrible, right? So there are probably, let's see, if you figure, that's probably 4,000 generations. If you figure generations 20 years, 400 generations. The one generation always think that the next generation behind them wasn't as good and is going to ruin humanity as we know it. And you can understand why, right? You look around like, oh my God, the people are going to blow up. They're horrible. It's going to die. Everything. Planet Earth is going to end as we know it. And every generation's completely wrong because the next generation rises to the occasion. So I never talk about the good old days. As far as I'm concerned, tomorrow's always better than today. Much more interesting and much more fun.
Well, it would be great if you could lead all of our meditation sessions, Tim. Get us focused on that. I love your optimism always. So,
Well, that
Alec,
explains why I have almost no friends that are older than 40, 35, 40, because they all start looking. They're looking forward to retirement, stuff like that. I got
so you
my
found,
youngest son, 6 years old. I'm looking forward to having more kids. Come on.
heck yeah. So you found the fountain of youth. It's undying optimism, right?
It's all in your head, man. The phrase "you're old as you think you are" sounds like empty words, but let me tell you, it's true.
That's great. That's great. I'd love to pivot and talk to you about the Treasury trade, so called, as we saw. Tens of billions of dollars, yeah, at least on paper, market value have vanished over the last year. Digital asset treasuries throughout the industry showed real amplified Bitcoin returns for a time, and a lot of the treasuries have stopped buying. Strategy and a few others excluded. Certainly Strive, the two companies there that have digital credit offerings. You've got companies that are down 99%, from their peak in August, September. Tons of companies are out there trading below, a 1x MNAV, which means they can't really sell shares without really diluting their common stock
Right.
to buy Bitcoin. So, from a growth perspective, Alec, do you think the treasury company model, and I know there's nuance to what that actually means in the marketplace in capital markets, but is it durable as a capital formation structure, or do you think that was a feature of the bull market, and how is that going to change moving forward?
Yeah, I do think that it was like it's hard to so essentially you had all these companies and no one was introducing any originality to what they were doing. A lot of people were just blindly copying what Michael Saylor had done because it worked so well. You look at 2022 and 2023 and strategy, back then MicroStrategy did extremely well. It's really interesting to see what's happening. It's a very overcrowded space. You have a lot of companies that are trading below NAV, and then you've got the ones at the top like Strategy and Strive who've issued this pref product. And what's really interesting with Stretch is, we've seen the decline in price, and then you see what they have to do in order to be able to, um, you know, pay on the yield that they promised, which is either sell Bitcoin or sell more shares. So that's damaging, assuming they sell shares like what Strategy has done. That's damaging to MSTR, which is, what people originally got into in the first place. So it does seem like they've treated it, no pun intended, they've treated Stretch with preferential treatment. And they want to make sure that they can pay the dividend. What will be really interesting to see is, was any of the Stretch price diminishing and going down to around 83, and I know it's back up, but how much of that was also due to leverage, right? If there's so much leverage that's tied into the actual price of Bitcoin, and something happens where that people need to have create liquidity, and liquidity in this case, or the price, is a consequence of liquidity. What does that have, in terms of long-term effects? Can Stretch get back to NAV, which is supposed to be around 100? And I guess, like, where do we go from here? There's a lot that plays into it. It's really, really interesting. I've been trying to follow it.
Yeah, it's gonna be really interesting to watch as we record now. STRC is still trading below $90. It did trade slightly above 90 for a while.
Mm.
Tim, in our pre-call show, you mentioned it touched down $83 a share, which is mid 13% effective yield, which I think was a really interesting trade that some people might have piled in, which led to it popping back to 90. But yeah, I mean, they have a lot of factors working for it. STRC is now going to be paying semi-monthly dividends, so twice a month. You've got that differentiation, but all there's so many things at play. Is the AI trade sucking a ton of capital out of the room that would otherwise be in this ecosystem? Like what you alluded to before, Tim, is the SpaceX IPO, are these, raises from Google, Oracle, tens of billions of dollars, and SpaceX is even raising, a bond now. Like, so I do wonder if some of the maybe institutional or larger pools of capital that would be investing in, like a fixed income product are looking elsewhere, and it's just sucking some of that air out of the STRC trade. I don't know if maybe the volumes are just still is still too small of a notional market that there's enough distraction to make it trade below. But at 1 month trading, 10 cents or $10 off par, I don't think is a big deal. If this is something that persists for 2, 3, 4, 5 months, I think then you kind of start to worry, okay, is this a durable model? But I think the prefs have been a real hit. I mean, strategy, you know in 2024 raised a ton of capital, mainly through their equity and convertible bonds. 2025 as well. And then now in this bear market in Bitcoin's price, you've got finally the pref, especially STRC, that monthly dividend paying pref, really has been a lot of the, I would say, bid on Bitcoin's price. They've been attracting capital, and it was just 2 months ago. It's funny how quickly things change, sentiment changes, but 2 months ago, strategy raised $1.5 billion in over the span of 48 hours on Stretch, and now it's the end of the world with a 13% effective yield, trading 10% below par. So it'll be really interesting to monitor, and I don't know how it plays out, but it's going to be a lot of fun to watch.
One of the things that surprises me about strategy is how lousy a Bitcoin buyer it is, right? Because they buy it at the dumbest times. My fund, in 2021, it was my trading fund, which I don't trade anymore because it just hasn't gotten a lot of funds. So we converted into a yield fund. But in 2021, it was the best performing hedge fund in the world. Not crypto hedge fund, best performing hedge fund in the world. 2023, it was really interesting. It was the third or fourth. We were nominated for a couple of awards for performance. And I don't know where the others were exactly. So I'm not sure what position we were in. But the way we did that was in November 15, 2022, FTX day, we shifted everything out of stablecoins and put it in the BTC and ETH. We did no trades in 2023 and still ended up being one of the best crypto trading funds in the world. And what that taught me was that it's really hard to predict short-term movements in Bitcoin, especially then. Now you want to predict a short-term movement in Bitcoin, bug JD Vance's jacket at the negotiations, and you'll know what to do with Bitcoin, which, like I said, I'm not exactly pleased with, but nevertheless, right now you can trade bigger trends. If you're not really a day trader, a minute hour trader, just really, really trading intensely. And if you're not right 8 times out of 10, you're going to end up losing money. The longer-term trend, sometimes very long trends, is what you should trade. And, the strategy is just bought. The one time you don't buy is when you have a lot of money, or you don't buy because you have a lot of money, right? You get an amateur investor, they won the lottery, or somebody died, or they sold some asset. They have a lot of money, so they start, where should I invest? Where should I invest? And the answer is nowhere. Get smart on the cycles, the prices, and then don't invest because you have money burning a hole in the pocket. Invest because it's a good time to invest. And Strategy was investing because the money was burning a hole in its pocket. The more it invested, the more it could raise. The more it invested, the more it could raise. And it's not good that Strategy owns almost 10%. It's frightening of Bitcoin, right? They are almost 5% around. They own almost 1 million. It's 847, I think, is the current number. So call it 4%. It's not good for one entity to own that. And Saylor's done a lot of really smart things, including sell a little bit. Let me sell 25 Bitcoin. The whole world went nuts, but the next time he sells, it won't be so bad. So he called it inoculating the market. And I think that's right. Because if one of Satoshi Nakamoto's Bitcoin sold, Bitcoin would plunge 20%. And then it'd recover after a while and people would get more sanguine about it. And if a second one sold, it would also drop, but not nearly as much. And so what Saylor's doing makes a lot of sense. But the only reason it makes sense is because Strategy has too many BTC. There's too much concentration in it. So he's become his own worst enemy. So he's bought at poor times and he sold a little bit, which is a good move. But we still need an upward 15% move before he's at break even. It's not a good way to be trading. And there are plenty of examples of that. He would just buy on little dips on the way up, assuming it's never going to go down. Because even Saylor, if you asked him, should I buy at 80 or buy at 50? He's going to say buy at 50. But he was just buying to buy, and it was creating a bit of a self-fulfilling prophecy. And to your point, Tyler, you're absolutely right. It's artificially, to some degree, buoying the price of Bitcoin. The problem is the same leverage that drives it up, once it reverses, drives it down more than it should go down, right? Because it's the classic long squeeze. We're leveraged here as it's going down. Shoot, we've got to sell more because we're getting killed, and so it forces it down. People talk about short squeezes, but a long squeeze also exists, and that's to some degree what's forced BTC down at this point in time. And it's a real risk there. And if there's something that drives BTC down, it will be something like, shit, Saylor's going to have to sell a bunch at a loss to be able to pay the bills, pay the dividends. And by the way, he's doing a bi-monthly dividend. But the reason they're doing that is because Strategy was effectively forced into that by Strive. Strive pays a daily dividend, right? So Strategy's now bi-monthly, so they're kind of moving a little bit in that direction. But I don't like the overall impact that Strategy and its strategy, uppercase, lowercase, have on the Bitcoin. I don't think it's healthy for there to be that much concentration, particularly the way he's done it, which is growing based on ever-growing leverage. It's just not a healthy dynamic for the overall sector.
It feels like he's kicking the can down the road in a really bad way, where he needs to keep the price of Bitcoin up, so he needs to keep buying because he's got some of the most size in terms of what they can actually do. When you see their buys, it's usually a higher number than what most of the market is able to do. And so what he's doing, by leveraging against or by MSTR, and raising new capital and issuing new shares and then buying Bitcoin, it's creating the same problem, but it's just kicking the can down the road. But then it's leading to them owning even more Bitcoin, which is, just what you said, Sam, which becomes a problem.
Exactly. And it can't continue forever. The irony is, I think the Bitcoin price would be higher without Strategy's buying, because it would be spread around, the purchases would be more stable, there'd be less focus on what a single entity is doing. Did he get out of the left side of the bed or the right side of the bed this morning? It would just be a healthier market, and I think the price would be high.
There's also another thing. It's Strategy's whole company is buying Bitcoin, right? I think it's better if you have other treasury companies that are involved in the space that are generating revenue outside of that. It makes it a lot more risky, where Strategy's completely 100% dependent on Bitcoin as a company. So that
it's actually not. It's about 98-2 because it does have a real business. But you're just saying what I just said in other words, right? it's not healthy to have so much of a concentration. The flip side of that is in the companies, they shouldn't be totally dependent on BTC either. And I think you're exactly right.
Yeah, I'm curious what you guys think about Endgame for strategy, right? Because, like, even Michael Saylor would admit, if you were able to pin him down on this can't, as convicted as he is in this strategy, this isn't something that can sustain in the same way forever. Is there, is there a way to monetize their Bitcoin stack that you envision playing out over the next decade in order to really put the stack to use? Is it generating yield? Is it doing something natively Bitcoin? Alec, what do you think Endgame might be for strategy here? At least over the medium term.
It's a great question. I don't know what they have in mind for that, but I know, like, for instance, if you look at the dividends that they have to pay, all Bitcoin needs to do is have an annual compound growth rate of 2% in order to pay that out indefinitely. So they're not in a terrible spot, right? They're not in a terrible spot if the price of Bitcoin continuously goes up. We know that's not the case in the sense of it will go up sometimes, but it will also come down. And even though volatility has dropped, very heavily, you still have the risk of what if it comes down. And we're kind of seeing the effects of what that looks like from the past couple, or I guess really since October. So I don't know what they could be doing on the revenue side. I think they should be doing more on trying to do that outside of Bitcoin. But they're not like their game isn't dead on their current trajectory. It's just they need other people to start bidding and they need more people to get involved. I do think there's a potential catalyst, which is the Clarity Act, which is if you listen to what a lot of the big banks are saying, if you look at what these major institutions are saying, is are building the infrastructure, they're building the ability to compete and play in the Bitcoin business or crypto or blockchain business, and they're really waiting for the Clarity Act. I saw an interview where he said that if the Clarity Act doesn't pass, which right now I think if you look at Polymarket or Kalshi, I think it's got like a 40 to 50% chance of passing and becoming a law in 2026. Then the most likely what will happen is there will be executive orders that come into play that say the same thing. Obviously, those or try and say the same thing as some of what they try and pass in Clarity. So I think that and obviously those can be reversed if another administration comes in and they just don't want that to be they want to reverse that executive order. But if Clarity passes and there's a solid chance of that, then I do think that could be a catalyst for other people to participate and for there to be less concentration on what they're doing in strategy.
Yep. Yeah, some good points. Do you have a thought on that, Tim, as far as the operating business? People have floated ideas about becoming some sort of pseudo bank or Bitcoin type bank. Are those feasible business models?
Well, I tell you, the one thing that's clear, what they're doing today is not a feasible long-term business model, right? It just can't be. Especially for a while, Saylor was against yield, right? So it's like, okay, what do we do here? I mean, there's only so long the merry-go-round can keep spinning, right? And no end game for a company is going to be, okay, this asset is going to go up forever. And so all we're going to do forever is continue to cash in on this asset. It's really not much of a company at that point in time. So there has to be something else they're doing. Alec earlier raised one possibility, which is, hey, they should have some other business they should have that's also generating cash, which isn't a bad way of doing it. It may at this point in time be apples and elephants, but it's certainly a thought. And strategy still does have its little software business that's still floating around. The other thing is to generate yield. And for a long time, Saylor was opposed to yield. In fact, I was on the stage right after and what last year in New York at the event that you guys sponsored as well, where he dropped his opposition to yield, which is really sort of odd that he was opposed to yield. there is no long-term success story for strategy that doesn't involve change, either generating yield on BTC, becoming a bank. That's an interesting one. I hadn't thought about that. Not sure I would recommend it because it's a really different business, but who knows? Or diversifying, I'm just making stuff up here, buying Bitgo, buying Coinbase, buying Binance, whatever, right? Can afford to buy a really big crypto company and then diversify, basic principle of investment, right? Because the problem with strategy is it's insanely not diversified to a crazy degree. And part of the reason everybody is jumping on the deathbed supposedly of strategy is all these companies were jealous when the price was going up. But hey, Saylor's a genius, and every other company in the planet is getting pressure. Buy Bitcoin, do a little bit of this, do a little bit of this. And frankly, they probably should have. It's a good diversification, same story, different side. But right now, strategy needs some form of diversification. You guys have mentioned 3 already, right? Another business, yield, become a bank, whatever. It needs to diversify. Just sitting on an asset, which is effectively dead, and the longer it sits on the asset, the more selling a little bit is going to hurt the whole market, including the company. Look at what happened when they sold, 25 Bitcoin. It's not a healthy situation for BTC. And I honestly hope strategy buys no more. I would be glad if they sold or use some of those BTC, pay them in kind to diversify into something else. That would all help the sector. But having this behemoth sitting there and essentially being a Satoshi Nakamoto, but we can identify the guy, right? And people can put pressure on him and take pot shots at him, none of which is possible with this other guy out there that is the only one who single-handedly owns more BTC than strategy does. I think is a horrible idea. I don't like what strategy is doing, what it's done, what its growth trajectory is. It's not good for strategy, and it's even worse for the rest of the ecosystem.
I'm going to sit on that. I'm going to sit on that for a second. Yeah. That's
sorry, Michael, but I'm not a fan.
Yeah.
Actually, I'm a fan of what he did to probably 250,000 BTC. After that, it gets too much and it's unhealthy for everyone.
Yeah, I mean, it's kind of that Lord of the Rings, the power of the ring, when he can go to capital markets and raise just the absurd amounts of money from, a company that was probably what, $1 billion market cap maybe when he adopted this
No,
strategy.
I think it was a couple billion when it was
billion
created.
And
it's like I'm saying, you don't buy because the money's burning a hole in your pocket. You buy when it's a good time to buy. And by creating this great cycle that winds up when things are going well, it gives you 1.5x or 2.5x multiple of the price on the way up. It means when it goes down, you're going to lose at least that much. And strategies this not prepared for negative markets and are not well prepared. It should have been. I mean, look at Bitcoin. Tell me you're not going to have a bull market. Like Alec was saying, hey, it's 2% a year. That's all we need. My God, if we achieve that. But it's not 2% every year. It's 100x up, 50x down, 100x. It doesn't take a genius to realize you got to prepare for bull markets. And this bull market we've had by crypto standards is quite mild. We're down 50%, only 50%. And I'm not convinced if you look at the drop to 60, it's a double bottom, which could be good, but it's a fragile double bottom. And it doesn't look all that good to me. Fortunately, in this case, because of the correlation, if we have a definitive end to Iran, and unfortunately, I don't think we're going to have one. I think it's just going to sputter out, and the world will continue in this very gray area as opposed to black and white. But if you had a definitive, clear end and short-term end to the Trump's war of choice in Iran, then I think you would see Bitcoin move up, and it might be a double bottom, and 60 might be what we put in, and it goes up from there. But even in that case, it'd certainly be a short-term spur up. But I'm not sure we're at the bottom yet. And if it goes below 60, I don't know what strategy is going to do.
Yeah, yeah. One thing, it doesn't seem like Saylor's going to slow down. Like if we've watched him enough to know he's probably not going to take your advice, right, Tim? And yeah, I think capital markets have just been too irresistible for him to tap. One thing I was musing about today on X, I was posting that something I'd like to see him do is that when he's raising so much money in bull markets, is to maybe add more runway in terms of a U.S. dollar reserve, so that way in those bear markets they can actually buy the dip, they can retire debt, whatever they need to do to pull those levers and really manage the perpetual top buying, because like you said, I
Absolutely.
think that's a big risk that goes
Mhm.
under the radar.
Very, very consistent. Identical in different words from a different angle to what I said. You can't just design your company for bull markets in whatever the company is dependent on.
Mhm.
Yeah, absolutely. We talked a little bit, generating yield on his stack, and it'll be interesting to see if there's interesting ways that strategy can do that. But I've been looking at what you guys have been doing. You guys have your Psalion yield product, and you've also stepped out into this lending product recently. Can you run me through and educate me on, like, what do these two products look like? Who's the typical investor, and what are you seeing more of that demand on the lend side in what I guess would be a bear market in price?
Alec, why don't you take those at least first crack at them?
Yeah, yeah, yeah. So happy to first, talk about what we're doing on the yield side, then I can get into the lend. So on the yield side, we're doing something that occurs in every single market. You look at, stock markets, you look at forex, you look at commodities, and it's nothing new. We're just applying it to crypto. So we can do this for multiple assets, but in terms of what we're doing for Bitcoin, is we are providing liquidity to market makers in the crypto space in the form of automated market makers, and we are providing Bitcoin as the liquidity, so transactions can occur. And what we do is we generate yield in the form of transaction fees over time. So as Bitcoin is transacted across these markets, we're providing the liquidity on the Bitcoin to Bitcoin transactions, and we're able to generate yield in the form of Bitcoin without losing any of the value of Bitcoin as we're generating the yield. So we've been doing this strategy for over 5 years. We've never had a negative day. We've allocated over $12 billion to the strategy. And it works really well. It's extremely market neutral. And when you look at what is out there on the yield side, there's covered call opportunities. There's various strategies that have not been as consistent and durable as what we've done at Salion on the yield side. Um, on the lend side, what we're doing is we're facilitating Bitcoin-backed loans, which has become a pretty popular thing across the entire space. But we're allowing people to come in and borrow against Bitcoin in what I'd say is some of the most competitive rates you could find. Right now, it's you can borrow against your Bitcoin at 5.5% for a 3-month term, up to 60% LTV. What's really unique about what we're doing in both the yield and the lend side is we allow clients to partake in both in a self-custody way. So we work with a couple wallet providers. The biggest one is Utila. We can also work with one called MPC Vault. But essentially, our clients hold their private keys. They can designate us as an allocator or a facilitator in the case of lending, and we can actually keep it in their wallet, and it never it we don't have the power to withdraw it to our own wallets or anything. We can literally just make allocations to the liquidity provisions that we do on the yield side, or to where we can actually borrow the stable coins, so USDC or USDT on the lend side.
Yeah, that's really cool stuff. Yeah, I think that's going to be a really attractive market, moving forward. As especially as if we do see continued dampened volatility in Bitcoin's, peaks and valleys, if that's a trend that does continue, and I think it will as Bitcoin matures as an asset, we I think part of the narrative of this cycle has been, that magic $100,000 US dollar number, and a lot of OGs were probably selling coins, getting out of it. But I think, now that the dust has kind of settled, there's a lot of savvy investors who invested in Bitcoin over the years, and now that we're sitting in this pocket in this next bear market, that lend product looks like a really attractive way, especially at really favorable interest rates that are competitive like that. To put part of your stack to work, right? And be able to upgrade your life and still hold those keys, like you said. Even you can even still self custody hold those keys. So yeah, really intriguing and something I think about a lot. I think, I think that's something that's just going to grow and grow as Bitcoin matures as an asset. And was that the thinking in the design behind the product?
Very definitely. But there's another element that is missing from that analysis, and that is taxation. Right. For a while, even thinking about taxes was anathema to a crypto investor, right? And it was crypto and tax evasion were pretty synonymous. As the have-nots have become the haves, and as the various tax authorities around the world have become more savvy, that's no longer the case. And the other reason there are people, they can afford to sell Bitcoin at a low basis, right, where they paid very little for it, but their tax bill is going to be huge, right? I mean, it's just even long-term capital gains, depending on where you are. Some jurisdictions will be zero, and some jurisdictions will be 30, 40%. In the US, it's currently less than that, but it moves around all the time. And so people just don't want to be taxed, and they want to get 100% of the future upside, but they don't want to be poor. I mean, there are a lot of people that have Bitcoin, 99% of their values in the Bitcoin. I'm not selling this. There's no way, right? So half the equation is to borrow against it, but the other half is what you do with it. Because if you borrow against it and don't do anything with that money, and then the Bitcoin price goes down, you're faced with a Saylor problem. Oh crap, I got to sell more and more to repay my debt. So, put it to work in something else. And, we talked about some of the other trades in the pre-call, right? Because crypto is no longer the sexy investment thesis that it was for so long, right? AI, you've clearly got, for the last 2 years at least, probably not a lot more, but AI is really dominated. Space is taking over some of the oxygen, even from AI. And quantum computing, which is lurking in the background, is going to have its moment as well when someone comes up with enough qubits to actually do day-to-day problems. And that's going to have an effect all across the world. It's going to make Y2K look like a walk in the park, which it actually was, but people were all afraid of it. And so there are other very, bleeding edge or leading edge investment theses out there that are taking over from crypto. So maybe the play is, I got 1,000 Bitcoin here. I'm going to borrow every penny I can on that, and I'm going to dump it all into NVIDIA or SpaceX. Or now it's probably a little bit late for that kind of stuff. But if you're ahead, if you're in touch with the investment community and you have a high conviction investment, maybe you can get lucky twice. At which point in time you're really doing well. But if it's just tied up in BTC, you don't have the ability to do that. So lend, and we lend against a lot of different assets, but BTC has by far been the biggest one for exactly this reason. People don't want to be poor anymore when they're on paper rich. It's like classic, people own lots of real estate, right? They're property rich, cash poor. At one point in time, George Washington was deemed to be the richest person in North America because he had all this land, but he never had lots of money. And believe me, I'm not crying any tears for George Washington, but he had all these massive tracts of land, and there he didn't have any mechanism to monetize that except to sell it. Here, people can own thousands of Bitcoin, and many people do. You have all sorts of mechanisms to monetize it. But the unique thing about Psalion is you have to give your Bitcoin, transfer it to another wallet where it can serve as collateral. What we do is you have to have a utility wallet or MPC vault, and we're talking to some other custodians, especially USQCs, but it's your wallet. It's your keys. You don't lose control of it. And it's frozen temporarily while it's serving as collateral, but that only makes sense. That is the big difference, and that is why people are truly, truly interested in this product. It's an innovation, not only because the interest rates are low, but anyway. So it's we're really pleased with the launch, and we expect this probably by the end of the year will be a bigger product in yield, and our yield is pushing $250 million. So it's looking good. It's looking pretty good.
Yeah, and I would also add, like, I think one of the biggest advantages of the low cost of capital is if you look at debt across so many other industries, you see extremely high cost of capital. Look at you look at something like real estate bridge loans. For real estate bridge loans, like, the going rate on a short term, let's call it 6 to 9 month loan, is around 12 to 14%, in which people are paying 2.5 points on origination. So there's and you can look at venture debt, you can look at so many other forms of debt where it's really expensive. Owning Bitcoin and using Bitcoin backed debt to replace more expensive debt can be so powerful for people's financial engineering of their personal strategies or of their business strategies. So the possibilities of what you can do is endless, but having a low cost of capital can bring you so many advantages in different ways.
Really cool stuff, guys. Excited to monitor it. Great having this conversation, and I know I'm looking forward to more of the Psalion Bitcoin Treasury Takeover podcast. Thanks for joining us today, and Alec, maybe you can see us out and tell us, where can people find more about your yield and lend products?
I would say first place, Psalion.com, Psalion. You can reach me at Alec, ALEC, at Psalion.com. We have so much information, we have so much collateral, no pun intended, for people. And yeah, I mean, we'd love to talk to anybody about lends or yield, or what we're doing on the VC side even. Tim is really spearheading that along with one of our other or one of the other partners, Luan, and that team. And yeah, I mean, there's a lot of amazing stuff going on. We're innovating. We're never staying. I'd say we're never staying put on what we're doing or stagnant. We're always looking into what else is out there and what else we can be doing. So yeah, we're happy to hear what else people are looking for. If there's something, the reason that the Lend product even spun out was because one of our clients asked for it. So yeah, we love these conversations and we love this community, and if we can have these conversations with people, we would love to. So
good stuff. Alec, Tim, thanks for the insight, the analysis, and the stories. I think the viewers are getting their money's worth here.
Thank you, Tyler. Thanks for this idea. It was great.